Hello traders and investors, I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets and we're doing it from a neoclassical perspective. That means every day we look at the markets, ask ourselves what happened today from a supply and demand standpoint. And what does it tell us about the coming days? I do this show 4 times a week, every Monday through Thursday, broadcast hour before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. I also do a show on weekly Sunday evenings, broadcast same time, same place. If you want to subscribe, you can reach up in the right hand corner and do so if you haven't already. That way you can get content when it's pushed. You get a notification. Last night we were looking at the markets, asking ourselves, what was going to happen. ECB today. The idea was that the ECB probably wouldn't do much and that we would get some sort of an attempt to turn higher in Europe, but it probably wouldn't go anywhere, and that's pretty much what we got. We did get a turn. We were looking at the Swiss market. That's the best market right now. That market gave us a pretty good idea of what was happening in Europe. And we can see from the quotes in the DAX really flat on the day. Gold traded down today. Silver was up. You had the dollar up slightly. It was up big against the yen, down against the euro. The Nikkei took a hit last night. It's up a little bit tonight, it looks like. S&P trades up 0.25%, NDX 0.25%. Russell, once again, the outperformer. That's been the case for a while. Russell's up almost 5% since the start of this run to the upside. Over in Asia, a little bit different story, with the Nikkei down big, but the Hong Kong market, the Shanghai market, both of those did trade a little bit higher. Last night we were talking about a 2-bar reversal on the NDX. Let's pull the NDX up and we'll start with it. And what we see and what we saw last night, and what we talked about last night, was this over-under right after an extended move should call for some sort of a pullback. That pullback, though, we thought would not take place, would not hold. The reason for that was because all the other indexes were not indicating that at all. And in fact, we got a little bit of a pullback intraday beginning the morning. It was a gap down. Or it wasn't a gap down, but it traded down, and then it ended back higher. And so the NDX trades back into the swing point highs low, is sitting up there for the employment numbers coming out tomorrow. So the NDX was unable to do what its individual chart suggested it might. And that was because the rest of the charts didn't suggest that. S&P, for example, actually traded higher, got over a swing point high, got over this one. So it breaks the swing point high, gets a little bit of follow through today. It's up above that 2103 number. That's the key number on a weekly basis. Tomorrow, of course, the end of the week. And the employment number is going to be the key number tomorrow morning. So it trades over it. The red arrow tells you it's a suspect move. That means it didn't have as much volume compared to the swing point high that it was breaking. So if you look at this swing point high over here and you compare the volume over here, they're going to be slightly less, and that is what the red arrow tells you. And that simply means that when you go over to high, you're not seeing increasing volume, and that says it's a little suspect. It may or may not continue. Not so much that as much as the probability of continuance, something we call mean time to failure, MTTF, has a lower probability. So it is going to fail in a faster manner is the way you have to look at that. That's the S&P. NASDAQ continues to barrel higher. You had the NDX hurt today off of Oracle. There was news of a cooking the books by one of the accountants, accusing Oracle of doing that. Oracle, a fairly decent weighting in the NDX, that hurt it pretty good, and that pulled it back and hurt all the big caps there. But Oracle tonight trades over the swing point high. The number over there is 46.96. Excuse me, 49. Let's go back and get it one more time. 49.69. And we trade over it tonight, close over it 49.71. So again, just like we saw in the S&P last night, this one trades over the high, gets over it, stays over it, has less volume. Again, it's going to be a suspect breakout. Folks, these markets are extended, but so far, all of these indexes we've just looked at and the one we're about to look at, even though the extension is becoming extreme, there still is no indication of failure. That means they can trade higher still. There's nothing to tell you it's going to turn here. Finally, if we look at the Russell also gets over last night, actually had the volume, and extends today. So you've got all your indexes still telling you they can go higher. Europe, a different story, and we'll tackle that here in a second. But before we go to that, I wanted to answer a couple questions from last night's video. There was a couple questions from potential members asking about the Neoclassical crash course that I'm doing. There was two questions. One had to do with how did someone fall out, because we'd had 10 members. I was limiting it to 10 because I don't want too big of a seminar. I want it to be small enough to where I can answer everybody's questions and make it more personal. Three of them, the actual people that had spoken and I had said I'd take them in order, they had not paid yet, and if they're not going to subscribe for a year, then we need to find someone else that wants to, if there's anyone else that wants to. And so that was why I opened it back up for 3 more people. 2 more spoke up again today. If those 2 follow through, then of course there's just 1 slot. If you want to be on the seminar, and the seminar is a crash course on Neoclassical, and that actually brings up the last, it wasn't so much a question, but a comment from an existing member that said, you've been doing this for 12 years, and you've outperformed the market consistently over those 12 years. I think you're underselling yourself. Yes, I did invent everything. These are my methods. The Neoclassical is something I created. The books that we have here on the site, the books by John Wiley, published by John Wiley, these books describe the model. What I'm going to do is give you a crash course in how that model is used, so that you can come in and you can come to the site and you can use the tools and the data on this site and be able to get at profitable trades. And I show you how to do that, and I do it in a very condensed form to get you started as fast as possible and being able to get value out of the site. So again, there's 1 slot left. If you want to take advantage of that, be the first one to write me. Just jot me an email at tat@tatoday.com. Just drop me an email. Tell me you want to take advantage of that last slot. I'll reserve it for you. You join up for a year, and it's at a $175 cost, so it's less than $15 a month. You'll get the crash course for free. It's a 3-day seminar, 4 hours a day, 3 different days, and we'll get you going on this path to consistent profitability. So if you really want to learn how this works and how I can make these calls as I do on a nightly basis, and that if you're watching you see more often than not actually play out the way I tell you, then join up. Let's take the next one. Let's move over to the world markets and let me show you what happened there. I want to go to Europe first because I think Europe is the market that most influences us, although we're kind of running on our own right now. Now I'm going to go to Switzerland again because, again, Switzerland's giving us the best reads at this particular moment. Switzerland last night was telling us that we were probably not going to trade lower. We got under, back over, had less volume, and we were doing, if you remember, we were doing a bullish retest regenerate. And as it came into that, right, tried to get a little bounce. What I told you last night is that more than likely today this would try to trade higher, probably wouldn't get very far, and more than likely set up some sort of an ABCD structure to the downside. I expect that's what's going to happen. We could get up to about this level would be where I expect it. If it gets as high, higher, I would expect that to be the level where it tries to turn, and then comes back down to do the full retest, regenerate. And so that's the way this one looks to me. It hasn't deviated from what we said last night. Matter of fact, it did exactly what we thought it might do today. Let's see what happens tomorrow. Germany, the CACs, neither one of those looked as strong as this one today. I expect what you're going to see is these things try to turn either tomorrow or next week and try to head back the other way. Over in Asia, it's a little bit different of a story. You've still got some strength coming in. If we look at Hong Kong, for example, Hong Kong's had a nice move off the bottom, still giving some strength here. Had this big wide price spread bar, high volume. That becomes a key bar. And a lot of times what you're going to see in such a bar is you're going to see this market gyrate around that level and not give it up. So personally, I wouldn't be surprised to see this gyrate in this area. You've also got another key bar that's almost lined up with it, and this is one of the things we always do in Neoclassical is we look to see what else is out there. You've got this bar that's a huge overlap area, and so when you have something like that, right, this breakdown bar and now the spike bar back into it, right, after a pretty decent push higher, you can expect that this thing's going to try to hang in this area for a while, try to consolidate. The most bullish thing it can do right now is just consolidate in this area. If it can do that for a while, then it can try to extend to the top side. And so this particular index, the Shanghai index, same sort of story. They're showing some strength. Where the strength isn't is in Japan, and that's because of the currencies. The Nikkei is getting hit as a result of the yen strengthening, and you can see that last night again. If you pull over a weekly chart, this market's had some wild moves, but it hasn't been able to go anywhere. As a matter of fact, if we come back, one other thing here while we're here, if we come back to the Hong Kong market and put it on a weekly, this is still doing a bearish retest regenerate into this swing point low. And so, even though that market has come off the bottom a pretty good piece, you've still got this structure in place that is holding prices down. That bearish retest regen reaches to the high of the low, so it's right in that area. Traded to the top of it, did a full retest, tried to regenerate lower. It's coming back to test it again. This is the second time. If you get over, if you come back a third time, probabilities become very high that you're going to get over it. If not, you can still regenerate to the downside. And finally, if we bring over the monthly chart, let me grab that one and put it over here. If you come over to the monthly chart, let me see if I can grab it. There we go. And look at the monthly chart. What you have here is a steep decline, a bounce, a steep decline, another bounce. Will you get another move down into these lows? That still looks like the higher probability setup. We'll have to see if it wants to do that or not. Finally, if we move over to the currency markets. So much of what we see in the equity markets is a function of what's happening in the currency markets. And so if you remember, although it wasn't, a direct correlation, and usually isn't in all cases, as the currencies move down, and I'm looking at the dollar here on a daily, right? As this moved down, if you remember, gold was moving up. Although gold started up sooner than the currency turned and started down, right? This dollar's been strong over the last year. There was some kind of delayed correlation, if you will, that took place. Now, as the UUP has worked higher, as the dollar's worked higher, gold has been going the other way. And so you've had like a 4-week decline in gold, a 4 or 5 week increase in the dollar. Those moves are fairly direct. They're also fairly direct with the currencies in other parts of the world, not so much the U.S. U.S. is running, the equity markets here are running on the notion that this is probably the best place to invest your money because, the economy's still pretty strong. If you move over to the weekly view, right, this is really just a large range for the dollar. And that large range we'll be able to see better when we move to the monthly here in a second. But you've got this range down here, and if I get them drawn in correctly, they'll be almost equidistant. There's the actual middle. Let's grab this one and bring it down. You really have these two ranges. And so as the dollar moves back up, it's really just in the middle now, even after this strong move higher. It's just in the middle of the range. Can it get to the top? Well, that will always be the test. This big wide price spread, high volume, low. The key bar in this chart, and these are the kinds of things I'm going to teach you in the Neoclassical seminar, is this is the key bar. When you know where the key bar is, then you can base all your testing off that key bar and a lot of your tells off that key bar. And so the key bar has a high, has a low. As it gets to the low and tries to break it, you see what happens. It comes right back into it. I suspect if it gets this high, it's going to have a hard time there and probably works back down some. If it doesn't, it's certainly telling us that there's a lot more strength than we expect. And so any kind of a direct move up into this area that continues on, then something definitely is happening with the dollar, and then all the implications of that become important. If it gets up here and turns, then that's what you would expect. That also gives you some implications of things that will help you trading other markets. That's it for tonight. Again, one slot left. If you want to get in, give me a email. Shoot me an email, and I will get you on the list to get the information sent to you. You can sign up and ensure your spot. That's going to start up in about 2 weeks. 3 days intensive training on neoclassical theory and application of it. Matter of fact, the last day we will do live trading. I'll show you how to do it on a daily intraday basis using the same principles you're going to learn to apply to any time frame you want to look at. Have a great night. Have a great weekend. I'll see you next time. Good night.